A very good afternoon to you. Let's get into the markets. Asian markets were largely on the up today, taking their cue from the US performance yesterday, although the Chinese market ended subdued. On news that Donald Trump was not considering firing Fed Chair Jerome Powell, the recently beleaguered dollar jumped sharply across the board. Trump's calmer talk about the ongoing trade war with China also helped to boost sentiment. The Nikkei share average closed up 1.9%. The Hang Seng Index jumped by 2.3%. While the Shanghai Composite Index ended down 0.1%. US markets rebounded strongly with all three of the major indexes closing up over 2.5% on the day. This was driven by US President Donald Trump hinting at lower tariffs on Chinese imports and also giving reassurance that there was no plan to fire Fed Chair Jerome Powell, something which many had argued he doesn't have the power to do unless it's for a valid cause. The Dow Jones Industrial Average rose by 2.66%. The S&P 500 ended up 2.51%, while the Nasdaq Composite Index gained 2.71%. Taking a look at local indicators, we see that the all-share index is up by 0.4%, trading at 90,247 index points. On the currency, we see that the rand is trading at 18.56 against the US dollar, 21.16 vis-a-vis the euro, and 24.70 against the British pound. Of course, the currency increasing quite substantially relative to major currencies. On the commodities front, we see that gold is trading at $3,336 an ounce. Platinum is trading at $966 an ounce, while Brent crude oil is trading at $68.13 a barrel. All right, let's get into it with Shantel Marx. She's the head of equity research at F&B Wealth and Investments. Thanks very much for joining us, Chantal, as always. So President Trump's hint at cutting Chinese import tariffs has to be a pretty pivotal moment for markets right now. If he can reverse his decision to, so-called more reasonable tariffs soon enough, can the expected damage to the US economy be limited or avoided altogether? And what does the current market reaction suggest?
So I think at this point, you can't really avoid the damage altogether. The fact that it's there already, we would have already started seeing a bit of an impact. And importantly, I think we've seen an impact on confidence. And that's not only consumer and business confidence, but it also filters into investment sentiment because there's just so much uncertainty out there. So even if we get a U-turn and absolutely everything is cancelled, which probably isn't the base case, as Trump actually mentioned that he said tariffs are definitely not going to zero. But I mean, even this U-turn, it just speaks to how uncertain the policy environment is currently. So my thinking is that there will continue to be knock-on impacts on confidence and in financial markets, that skittish sentiment that we've seen over the last few months is likely to persist.
Yeah. So the latest developments have been a boon for emerging market currencies, including the rand. And I see that the rand has strengthened quite substantially as a result. What about the remnant issues around the GNU? Barring those, could the rand strengthen further?
Yes, so I think that a lot of the issues that was facing the rand actually was domestically based. So you had this this kind of global story that had a negative impact on the rand. Initially, we saw emerging market currencies generally sell off, but the rand was much weaker than our emerging market peers. That could be a function of it being a high beta currency. We sometimes refer to the rand as high beta because it tends to move quite violently, being a very liquid and deep emerging market currency. But I think that the weakness coinciding with some of the political turmoil that we saw locally tells us that it had something to do with that as well. So it's very difficult to split the two from one another. But I would expect the rand to continue strengthening and to strengthen a little bit more closer to its fair value levels, which we think are a bit below where we are currently, should we have stability in the GNU and if we don't have further external economic shocks.
So, Chantal, I understand that Aspen released a statement yesterday to the market indicating that they could be hit to the tune of 2 billion rand, and also talking about a further impairment of around 800 million rand. That was yesterday, but today suddenly we see the share price being sold off to the tune of over 30% or thereabouts. What exactly is going on?
Well, what happened yesterday was that they released the statement on the closing bell, so at 5 o'clock in the afternoon, which means that there wasn't trade going on after they released the statement. So investors could digest what was happening overnight and this morning, and they obviously decided they really didn't like it. And I think that that is very fair. So what's happened here is that they are in a contract dispute with a pretty large manufacturer or a pharmaceutical company that they manufacture on behalf for, and they estimate that it's going to have a 2 billion rand impact on their earnings before interest and tax in this financial year, which is quite massive. And you mentioned the 800 million rand impairment as well, so that will also detract from the profitability of that business near term. And then importantly, they'll have to fill that capacity, because if they don't have that capacity, it's going to have an impact on their manufacturing margins as well. So they're in a very difficult position. We've estimated the 2025 impact to be about 11-12% of earnings per share. So that's the ultimate bottom line profit of Aspen. But the impact could extend beyond what we see this year, because it's going to take a while to fill that capacity.
Yeah. And very quickly, Chantal, I see Capitec came out with their annual results reporting headline earnings up 30% at 13.7 billion rand and a whopping dividend of 44 rands a share for shareholders. Your quick comments on them?
Well, we saw a really positive share price reaction as well. The share was up 8% a few minutes ago when I checked. And it was just a really solid, high quality result, showing very strong growth both in their retail banking business as well as in their value added services business, including insurance, notably funeral policies, as well as life insurance, which is a new venture for them. The fact that they were able to up their dividends, I think, was quite surprising to the market, particularly in excess of what headline earnings per share was, which was the baseline expectation. So yeah, I mean, they seem to be in a very comfortable position. They seem to be gaining market share and outperforming the market, and also diversifying their business away from just what was mainly a small retail banking operation a few years ago, a major retail banking operation complemented by business banking and value-added services as well.
Excellent. Thanks very much for your insights. As always, Chantal, that was Shantel Marx. She's the head of equity research at FNB Wealth and Investments.